topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome. Man, it's great to be here on another Monday, talking taxes. You know, we get to have fun. If you got questions, ask them. We try to get all the questions answered as possible. Having good days around here and taking care of things at the ranch. And, you know, everybody gets busy. And when you get busy, things fall to the wayside. You know, sometimes you miss things and you've got to correct things and going. And that includes those dreaded tax returns. And you get to a point where you found out, hey, I made a mistake and you need to correct your taxes. Maybe you need to amend your return. So, you know, should you or should you not even mess with amending returns? Now, the first thing I'm going to tell you, you know, when you're sitting down looking at your 1040 and you say, I might have missed some, or I did something wrong, or maybe it's just a simple math mistake. So you filled it out by hand. You know, it's hard these days to have a simple mathematical error because 99.9% of the people are doing theirs by computers. And so they're using some kind of computer software. So those simple math mistakes don't usually happen. Now you may transpose a number here or there and the IRS fixes that as well. So that could be your simple math mistake that's out there. And hey, you know, it's been done many, many times. Not just by you, but also we've seen it in the professional world as well, those that don't do a lot of checks and balances on tax returns. And so those simple mistakes can still happen. Now, I don't consider that necessarily mathematical. I consider that more of, hey, just a fat finger and you hit the wrong key and didn't pay attention and there was no verification that is out there. So, you know, do you have to really amend a return for something as simple as, you know, those math mistakes? No, the IRS is going to correct it. IRS is going to send you a notice and say, hey, you know, you put this and it should have been this, and therefore you owe more money or you're getting a bigger refund or had no impact whatsoever. Whatever the case may be, they do that simple fix. So you don't necessarily need to do an amended return. Now, if it affects other credits and other things that are on your return, you might want to go in and recalculate your return on an amended return and make sure that the IRS is correct. Yeah, I've seen them and they've been known to, when they make the corrections, they don't give you the additional credits or other things that you would have. They just make the math credit and deductions stay the same. Is that fair? No, not really. Is it their job? Definitely not. IRS's job is what? Collect money. That's it. Realistically, they're supposed to be there to help. But have you ever called the IRS and sat on hold for 3+ hours and talked to one of their agents that are on the phone and you get nowhere and they don't give you the answer? That happens. Never said they're always the sharpest tool in the shed. You know, so you get what you get when you're dealing with a government worker whose main job is collections, not really doing taxes. So, um, you know, go through, you now figure out that, hey, they're wrong. So you want to file that amended return. And that's filing the 1040X. Now, what are some of the other reasons that you would want to file an amended return? Maybe you're correcting your filing status. You're correcting your income. Maybe you left off a 1099. Maybe you left off, your a W-2. Maybe you had 2 or 3 jobs and you only reported a few of them, but you didn't get the last one. We've had a client who actually had 15 different W-2 jobs. And so she was going through and giving us all the W-2s. Well, we come to find out she still forgot one. So there were 16. The next year, we're going back and asking, do you have this W-2? Do you have this one? Because we weren't provided these W-2s. No, I didn't work for that company, or I didn't work for this company, but I have these new companies here. And then she still missed another W-2. So you need to go back and correct that. And she forgot some 1099s because she had multiple 1099 jobs. So those are easy to sometimes forget. But if you're filing your business section of the return, your Schedule C correctly, and you're reporting all your income, even if you miss a 1099, it isn't going to matter, that much. And then, maybe you missed some deductions. Maybe you didn't get the full child tax credits, or you didn't get all your deductions on your 1099s for your business. You didn't maybe put all your dependents on there. Maybe this is the year you can claim one of your children in divorce or something, or the tax liability was calculated incorrectly. So then you would go through and amend your return. Hey, we got a question here from Jeff. When the IRS makes corrections and it is in your favor, would you let them know, or would you let them give you the money? Well, the IRS made the changes, so therefore I would just go back and make sure when you do the amended return, how incorrect were they? But they've made the change. They're not going to look at it again, probably just take the money and wait. But as a licensed professional, I would explain to you, you'd be better off to file the correction as a correct amended return and pay the taxes that's due so you don't get in trouble. But that is a decision you've got to make as a taxpayer. Hey, what is the risk of not filing? There's a lot of times we will recommend to people, because of our licensing and our professional responsibility to you as our client and as the taxpayer, that we would recommend filing those amended returns to make the corrections that you need to make, even if it means paying more money or getting less refund, things like that. That would be our advice. Now, do you have to do it? That is purely a taxpayer's decision, not my decision as your tax professional or as the enrolled agent working for you. We would just give you advice, and then it's up to you to take that advice and move forward. We've had many people that go, hey, it's not worth the risk of letting it ride. Other people would say, hey, it's worth the risk. I've gotten the money. They did it incorrectly. It's not my fault. Unfortunately, even though it's not your fault and they calculated it, if they were to come back and say, hey, they calculated it wrong and gave you the money in error, you would owe that money plus interest back on that money as well. Don't get me started on whether this is right or wrong. Nobody actually loves the IRS except for the U.S. government and the employees in the government. And I'll tell you this, we've represented some people that work for the government and are employees of the government because they did not pay all their taxes. and they're not fans of the IRS either. So I can almost guarantee you that almost every taxpayer out there is not a huge fan of the Internal Revenue Service or a huge fan of paying taxes, but it is an evil necessity and stuff. Now, one thing the IRS does say is you don't need to amend if the IRS, lets you know that we corrected errors on your return or accepted your return without certain forms or schedules, or ask you to send those forms or schedules. So maybe you left something off. Maybe something didn't get transmitted. We've seen that happen. When you're electronically filing, still there are sometimes things don't quite make it to the IRS. And so you may have to file these additional forms or schedules that the IRS would be asking for. Now, that just means giving them the form, not amending the whole return. Now, if they let you know that they corrected errors on your return, again, I always tell people, double check it. They've been known to be wrong. So go through, do an amended return in the software you were using, or talk to your tax preparer and let them know that, hey, the IRS made these corrections. You may have to pay some kind of consulting fee for the tax preparer to go through and look to see whether they're right or wrong, and whether you got all the right deductions after they made these corrections. But hey, it's worth investigating and checking to make sure that that is right. So generally, when to file that amended return, claiming a refund, you've got to actually file that within 3 years of the date you filed the original return, or 2 years after the date you paid the tax, whichever is later. If you filed early, let's say February or March, you would actually start counting from the April 15th tax deadline. So you would have 3 years from there, or 3 years after the date you filed your original return. So if you filed late, or you had the extensions out there and you filed like October 15th, you would take from that day and go forward. Or maybe you paid the tax late and you would go 2 years from there. So it's whichever is later. So special rules do apply to file for refunds. So when you have a net operating loss, foreign tax credits, bad debts, or other issues, you may have more time to file as well. And then if you were in a federally declared disaster zone, you would have more time. Service in combat zone or a contingency type operation, you would have more time to file your amended return. If you had bad debt or worthless security or the foreign tax credit or deductions, you can do that, or a loss or a credit carryback. Those things would have potentially extended time to go through and file. The one that we see the most carryback is going to be, the federally declared disaster zone. We do see it sometimes on bad debt or worthless security when it's discovered that security was worthless maybe the year before or 2 years ago, but you didn't know. It's been sitting in your account. It's maybe at a zero value, but they hadn't really done bankruptcy, or it's down to a penny stock, and you bought the stock for $50 or $100 a share. You might be able to go back and do that, amend that return for that loss back in the year it really became worthless, but you may have just discovered it today. My father had that happen to him. He was invested in this group that did golf courses, and they basically were telling him that the stock value wasn't all there, but they didn't say they were bankrupt, didn't say they were flat broke, didn't say it was worthless. And discovered as they were going that they actually transferred stuff from one place to another and made that company completely worthless back in 2 years earlier. So we did a carry back to that year when it was truly worthless stock, and took that to tax deduction for that year so we could bring the losses forward on that investment and be able to take the write-off in the 2 preceding year or 2 years after it actually became worthless stock. So we were able to go through and do those amendments as well. Now, if you're going to amend your personal return, you're going to amend this return with the form 1040X. That is the amended U.S. individual income tax return. You can actually, if it's within the last 3 years and your company has software to do it. Now, a lot of times when you're using online software, you don't have the ability to do online 1040Xs with that software, but I don't use everyday software that you would use for your own personal type things. So I don't know how TurboTax or any of the other ones do the amended returns from the previous 3 years, but we could go back to 2023 and actually file amended returns for you personally, or 24, 25. So we do have the 3 years to be able to do that and file online. Now, you're going to submit a completed amended form 1040X with your changes for the return year you're amending, and then attach supporting documents and the changes that you would have, or any new forms that you would have, and schedules. So, and you're going to also explain on the 1040X why you're amending the return. So it could be as simple as, hey, I reported Schedule C under my spouse, but it should have been under me. So therefore, I have to file this amended return. Or it could be a superseding return, and I file the amended return to correct who is getting credit for the Schedule C self-employment, so it gets corrected with Social Security as well. So, things that you would go through and do, but you got to make sure you dot your I's and cross your T's, have the supporting documents with it, have the supporting schedules that changed. So whether it was maybe interest that you didn't report, or maybe some stock trades that weren't reported, or even changes on your Schedule C, you would include, Schedule B or the 8949, or you would include the Schedule C for the business changes as well. So you can go through and do that as well. Hey, now, let's say you make a mistake, and then you make a mistake and you're amended, and then you make a mistake on another amended. You can actually amend your return up to 3 times. So, hey, just keep that in mind if you needed to do that. So get your amended returns in, get your refund, or pay the taxes due. Don't let it ride. If you owe tax, send the money with it. Yes, there's going to be some penalties. There's going to be some interest that's all going to apply, but get that in and get that filed. If you have a refund, then you can put on there where the direct deposit would go and have that money refunded. IRS is not keen on sending paper checks these days. So however, if you do submit a 1040X on paper, you're going to get a paper check. Why is that? I don't know. I'm looking at what the IRS rules are, and that is some of the rules the IRS has. But again, if you need to get that money in, pay the tax, they'll send you additional voucher to pay any interest or anything else that would be out there. Hey, we're going to take a short break. When we come back, we're going to talk about amending your business tax returns, and we're going to do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Welcome back. Talking about amending returns, and now we're talking about your business returns. So, when you go in and you find errors on your business return, maybe you didn't get all the deductions that you should have had, or maybe your tax preparer kind of embellished some numbers and you need to correct it, meaning they over-reported deductions or under-reported income. Maybe you gave a total of income, but your 1099s came out higher. We've seen that like in trucking clients that we do taxes for, and then we fix tax returns and fix their IRS problems, where they get a 1099 for much higher than actually deposited in their bank account. And that's usually because they get settlement statements and they get all kinds of deductions for fuel and other stuff. But yet the trucker went through and just added up what was deposited into his account, but didn't take into account the full value of the settlements that he was getting, less their expense deductions that they were taking out of it. So, if you're working in an industry where, you're getting a settlement type statement where they're giving you a gross amount that they agreed to pay you, less things that they are considered reimbursed expenses like insurance and maybe a truck payment, whatever it may be that's coming out of the check before you get it, and you get a higher 1099, means you may have missed the deductions and you might be in net amount be correct, but as far as the gross to gross on the 1099s, you are at two different levels where the 1099's up here and what you reported is down here. So you might want to correct your tax return. So you're going in, especially if you're running a business. So you have generally 3 years from the original filing date to file the amended return. It's going to take 8 to 16 weeks to process. Nobody said the IRS is fast either, so you've got to take the time. Now, your form for adjusting your business tax return is going to depend on how you are set up as a company. If you are a sole proprietorship or a single member LLC, you're going to file a 1040X to adjust your personal return and then attach the adjusted Schedule C. And again, have your reasons on that 1040X for doing that. If you are a C corporation, you're going to file the 1120X, and you're going to check the box on that 1120 for amended returns. So you can file the form 1120X, or you're going to check the amended box on 1120. You got to see how your system is set up to decide which way you would go. S Corps. You're going to file 1120S with the amended return box checked. Make sure you're checking that box. You will have to, again, include explanations. If you're a partnership or a multi-member LLC, you are going to file an administrative adjustment request, an AAR, or an amended 1065, depending on your partnership rules. So you need to know your rules based on what the IRS has there for you as a partnership. Now you can see kind of some of the rules that the IRS has. They have a lot of the rules out there on their website, and some of the things that they're including that you need to do. So when you find a mistake, what do you need to do? Well, first thing you need to do is gather records. Get your original tax return, your bookkeeping updates, your new financial documents, and your receipts. Then you're going to go in and complete the forms. Clearly mark the corrected numbers, line items, and provide a written explanation for what changed. So whether it's revenue line 1, or maybe you have new miscellaneous deductions that you're prepared and go in, or hey, maybe meals and entertainment was classified in the wrong place. Instead of being per diems at 80%, it was put down into the 50-50 category. So you can move that and give the explanation of what is it that changed. So you want to make sure you're dotting your I's, you're crossing your T's, and making sure that, hey, what you're doing is absolutely correct, and then explain it. Give the explanations line by line what changed. That is what's going to help the IRS and going to help speed up the process. So IRS kind of makes it simple because it's the same form. You're not moving when you're filing 1120S or partnership returns. You're not necessarily moving from an 1120S to 1065 or a 1065. You're just checking a box that says amended. And then you're adding the supplemental forms to explain the differences and what has absolutely changed. So, if line item 1 is, let's say, revenue, and it changed because the 1099 that you received was a gross 1099 prior to deductions, you can explain that even though I only collected this, the 1099 that was received included these other deductions. Then you can use that same explanation that, hey, I did not deduct these because I originally reported the net amount that I received and did not report the gross, and therefore I can take these deductions for fuel. I can take this deduction for insurance. I can take this deduction for whatever other settlement deductions were on the settlement statement if you were a truck driver. So, things like that allow you to take those deductions, and then you're using the same evidence and the same reasoning for the rest of the lines, 12 through 30 or whatever, for the adjusted expenses that it tied back to a settlement statement or the year-end settlement statement, whatever it may be. So those sometimes are the hard things to get through to people in explaining. Many people don't necessarily look at their 1099s to see that it totals up. And that's not a good thing. So, if we are working with somebody and we're doing their taxes and their bookkeeping and everything, we tie the 1099s back to their bookkeeping. If you're not reporting all your revenue coming in, then you would have a problem, and you would have revenues less than what was on the 1099s. Or maybe the person you're working for gave us the wrong one. And so if they gave you incorrect 1099, then what you would have is you would have to report it and say, hey, this portion was incorrect. You can go back to the person you're working for, have them try to correct the 1099, but a lot of times that doesn't happen and they won't do it. Sabian, man, great question. How would a business owner even know all these deductions? Well, Sabian, one thing, you're running a business. So you should be knowing that what you're spending going out of your business is a deductible business expense if it's related to business. Ordinary and necessary, as the IRS would put it, is what you can deduct for your business. So if you're in a manufacturing business and you have cost of goods sold, the parts that come together to make whatever you're selling and your manufacturing is going to be part of the expenses, as well as all your overhead and administrative expenses, your salaries, your wages, your telephone, your insurance, your rental costs or your building costs, um, you know, telephones, electric, water, you name it. All these are related business expenses and much, much more. Same way if you're running a consulting business or a construction business, you have costs. Each type of business has different uh, costs that could be tied to it or that are ordinary and necessary. Most businesses would have a telephone line. Most businesses are going to be paying for possibly internet services. Most businesses are going to be paying potentially rent or insurance, utilities if they're renting a place. See, so you're going to have a lot of normal everyday expenses. So you're looking at what relates to business. Now, paying your home mortgage does not necessarily relate to your business, but you may have the home office deduction where you can take a portion of that. Um, you may have your personal car, and so the deduction for your personal car, if you're just going to work and back, is your commute, not deductible. But if you're using your car to go visit clients, pick up parts, uh, run errands for the business, then you keep track of your mileage and that becomes deductible mileage. If you've bought a car within the business and you're using it just for business, the car would be deductible for business. But if you're using that car personally, then part of that car is not deductible because you have the personal use of it. So the best thing that I can tell you is find yourself a good bookkeeper that knows your business. And so the more they know the ins and outs of your type of business, the better you're going to be in finding the deductions. That bookkeeper should also be going back to you and saying, hey, did you have this? Did you have that? These are normal and ordinary expenses for your type of business. So, hey, are you claiming this the correct way? The same way when truckers get per diems, the number of nights they're on the road away from home. They get so much per day, $80 per day that they're away from home, except for the first and last. Then it's $40, but it's 80% deductible on the tax return. So is this common knowledge to ordinary people? No, but it needs to be common knowledge amongst the people that are preparing your taxes. So getting somebody good that knows your industry really helps a lot sometimes when it comes to preparing taxes and verifying that things are not left out. Is it normal, ordinary type things that are going on in your business, or is it something that is, completely, different and off the wall? Did they find all those deductions? That's the hard part. When you're a business owner, you want to be verifying that you're getting every deduction possible, minimizing the tax that you're going to have to pay. That is the goal. Should always be minimizing the tax that you or I, as a taxpayer, has to pay into the federal government. We have better ways of spending our money than the way they spend the money, regardless. If we operated trillions of dollars in debt, we'd be bankrupt and we wouldn't be able to do it. Our budget couldn't do that. Should the government's budget? No, it shouldn't. Hey, we're going to talk about fixing returns IRS filed on your behalf. SFR, substitute for return. and what you need to do when the IRS files those SFRs for you. And we'll do that right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. SFRs, substitute for returns. Man, I'll tell you, if you have the IRS filing a SFR on you, you owe way more than you should. So IRS files these SFRs because filing taxes is mandatory. If you don't file, the IRS is going to file for you. They also want to collect as much tax as possible. So they do this by filing a return on your behalf. They also want to enforce compliance, and filing an SFR for the taxpayer pressures you into filing your own accurate tax return. Bottom line, SFRs are not helping you. They're protecting the IRS and the government's interest. That's it. And once they file these SFRs, they are going to send you a notice of deficiency, the CP 3219A, and it's going to tell you what the IRS says you owe. And your tax debt then becomes official. And you now owe penalties and interest that have been accruing on that balance since April 15th, the year it should have been filed. This return may be filed 2 years, 3 years down the road. And they maximized your tax debt. And then they started giving you all these penalties and interest. And now your tax debt is a huge, huge number. And then the IRS starts collections. That includes liens, levies, wage garnishment, Social Security garnishment, if you don't pay the balance that they are now demanding that you owe. And if you don't respond, the IRS assumes their version of the return is absolutely 100% correct. Even though they know, as well as you know, and I would know, that it overstates the tax liability probably greatly. Now, you can fix it. You can replace it with a correctly filed return. And here's where we're going to go back to. You're going to have to go back to collecting and gathering your records, your W-2s, your 1099s, your other tax documents. If you're missing something, you can get transcripts from the IRS. IRS will have your 1099s, your W-2s, other tax documents like your 1099-Bs. Now, they're not going to have the summary form of the 1099-B. They're going to have every single trade that's out there. Does it mean every one of them has cost basis when you've been buying and selling stock? Not necessarily. Is it correct? Not necessarily. So the burden is still back on you. So then you're going to prepare, once you gathered all this stuff up and you gathered all your deductions, and if you're at 1099, you're going to have to go back to that year to go back to bank statements and credit card statements and figure out all the deductions that you should have for your business to offset against that 1099. Which is a lot of work. And then, once you have all this, then you can go to preparing the correct return. You can file the missing year's return using accurate information, including deductions and credits you were eligible for. And then you submit it to the IRS. So even though they've already filed the SFR, the IRS will accept your return as long as it's more accurate. I almost guarantee it would probably be more accurate. But one thing you want to do, even if you have your W-2s and your 1099s and other tax documents, is get the transcripts from the IRS. Go back and verify that you have everything on your return, all income items reported. Then once you submit it to the IRS, it's going to take them a while to process it, especially if you're having to mail in a paper copy and everything to the IRS. But then the IRS will eventually get it processed and your tax liability be reduced, often significantly, as well as the penalties and interest would be reduced based on the amount of your new adjusted balance. That would reflect back to April 15th of that year. And then if you still owe money and you can't afford to pay, then you can consider, your resolution to your tax debt. IRS payment plans offering compromise or other resolution strategies. So if you got SFRs out there, hey, call Taxation Solutions at 888-930-1016. Again, 888-930-1016. And we can help you refile these returns and get it down to that reasonable actual balance that you owe. And then figure out what we need to do at that point to resolve the remaining outstanding debt that you would have. So I want to go back to one thing. So when the IRS files these SFRs, because I had people, well, they filed an SFR, so why do I need to worry about it? Here's a good reason. Let's say you earn 70,000 in wages, 2,000 in interest income. IRS is going to file your SFR. It's going to show 72,000 in taxable income. It's going to have no deductions, no dependents, no credits. Your tax bill right there is $11,800 plus penalties and interest. But if you file the corrected return, you're going to have your standard deduction. You're going to take your two dependents' tax credits, your adjusted taxable income. So let's just say you were single, two dependents. Your taxable income, it goes down to $56,250. Your tax bill is only $6,200. That's $5,600 just from correcting what the IRS did. Now, imagine if you had a $100,000 1099 to it, and they put that $100,000 1099 with no deductions. That's 15.3% for Social Security and Medicare right there off the top, that you would owe $15,300. So that adds to it. Now, then they tax you for federal income tax on that $100,000 as well, with no deductions and no credits. So again, that adds to the tax that they're going to say you owe. That's $100,000 then is going to be taxed, let's say at about 25%, another $25,000. Now you're talking about $40,000. Would you be there if you had all your deductions? Probably not. Maybe you have $50,000 in deductions. Well, that's $7,500 right off the top. then your tax bill, if you had dependents and you took your standard deduction and everything, is going to probably be down into the 30s. And now you're only going to owe around $3,000 in tax, plus the 15.3% on the 50,000. So, and then you're going to have additional deductions over there for self-employment. So now we're down to 2,000 plus Social Security and Medicare on that 50,000. That's 7,500. So you're talking about $9,500 in tax. Huge difference between that 40 and that 9 out there. You want to make sure those things are corrected timely, and then you're adding penalties and interest on top of that. So it makes replacing SFRs extremely, extremely important. Now, there's reasons not to replace an SFR per se, but that stuff, if you're working with us at Taxation Solutions to fix tax problems, fix these SFRs, we would go through. We had a client the other day, we're looking at the SFR. SFR actually was less tax due than if I would have filed the current actual return right now. IRS wasn't requiring it because it was very old. He was also running up against statute of limitations. We don't want to reactivate statute of limitations for another 10 years when these statutes could be running out in the next 6 months. We want to get rid of the tax debt and it goes away, so we don't want to deal with it. So, James, I got a great question. Can the IRS file a SFR for multiple years? Yes. If you haven't filed in years, the IRS can prepare an SFR for each and every year they have income records for. So if somebody's filed W-2s, 1099s, interest, 1099-Bs, and you didn't report anything, the IRS can do that for any year you have not reported. Now, does replacing an SFR erase penalties? No. Penalties and interest still apply, but you can often request the penalty relief through programs like the first-time penalty abatement. Penalties can be and do generally get reduced when you file the actual return down to the last, to the actual amount you owe. And if you ignore the SFRs, IRS is going to treat it as final and begin collections. So keep those things in mind. Janice, I agree. This is all confusing. Would it be better to have a bookkeeping company? Do business bookkeepers keep track of all these things for the company? Janice, absolutely. If you are in business and you're running a small business, whether you're running it through an LLC, S Corp, C Corp, DBA, reporting on Schedule C, if you have a business, you should absolutely be using a bookkeeping service to keep track of all your expenses. Your job is to grow your business. The bookkeeper's job is to keep track of what you're doing in your business so you can make better business decisions. And having somebody to rely on to be able to do these things becomes extremely important in growing your business, knowing how am I doing in business to make things better, to fix the business, to plan for the business, and to grow the business. And then knowing that we can reduce those taxes and your bookkeeping fees are also tax deductible. Your tax preparation fees are tax deductible. So all of those things are things that you can use in your business to lower the tax ability of it. Man, time flies when you're having fun. If you got SFRs, call Taxation Solutions today. It's 888-930-1016. Again, 888-930-1016. Or maybe you're dealing with large tax debt, $10,000 or more, give us a call. Let us go through. We'll do some free consultation, free call. Mention you heard it here on Tax Talk for you. And if you mention that, we give you special discounts as well. So again, call Taxation Solutions at 888-930-1016. Hey, it's always great to be here on Mondays. We're getting the week kicked off in fast mode, talking about SFRs this week and reducing your tax burdens as well by filing the actual return, amending your return to lower your taxes. Hey, be here every week, Monday, 10 a.m. Eastern Time on W4CY Radio. Connect with us over on Tax Talk, the number 4u.com. Make sure you're here. I'll be here. You be here. And we'll see you next Monday. Have a God-blessed and glorious week. See you Monday, 10 a.m. Eastern Time here on W4CY Radio.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.